nature and behavior of the balances. As we know very well that for this bank reconciliation, we have two balances with us. One is the balance as per cash book, bank column, obviously. And second one is the balance as per bank statement. Bank statement is the document which is an extract of the record maintained by the bank. So these two documents produce balances. And these two balances should always be equal. If these are not equal, then we have to work out for their adjustment in the cash book, or at the same time, we have to prepare bank reconciliation statement. The thing is that there are few behaviors associated to these balances. So we have to learn that what are those behaviors. Just see, we have business record with us through which we are preparing cash book, and we have bank record with us through which we are having bank statement provided by the bank. This bank statement is also known as passbook. In fact, this passbook is the book traditionally that was maintained by the banker for the customer. Customer means the business. You are representing the business, by the way. So you, being accountant of the business, you are preparing cash book and the bank column of cash book. Number one. Number two, that the balances as per cash book or as per bank statement can be favorable to the entity or can be unfavorable to the entity. And you are the entity, you are in fact representative of the entity, the business entity. I repeat, you are the accountant, you will suppose yourself as an accountant of the business entity. So the balance can be favorable or can be unfavorable. If it is a deposit account, it will give us debit balance in the cash book and credit balance in the bank statement. Whereas, if it is overdrawn or overdraft account, it will give us credit balance as per cash book and debit balance as per the statement. I just repeat for your ease that you are representative of the business acting as an accountant, and you are maintaining this cash book. When there will be deposit with the bank, means you have balance kept in the bank, it means it is your asset. If it is your asset, it means that bank is obliged to pay on your demand this much balance. So for you, means for your business, it will be taken as an asset, debit in nature, and for the bank, it will be taken as a liability, means credit in nature. Now let's see. If you have overdrawn, means you had a facility to overdraw an amount in excess to the balance available in the account. So in that case, let me discuss this thing through an example. Supposedly you had bank balance of 10,000 rupees. But based on a facility, you withdrew rupees 12,000 from the bank. What does it mean? That you took 2,000 as overdraft facility. So this 2,000 will become your liability. Means you have drawn in excess to the balance that was available for you. So the excess amount of 2,000 will become your liability and will be taken as credit in nature. At the same time, since bank has given you this as an advance or as a loan, it will be an asset for the bank. So it will be liability for the business and asset for the bank. So the important tips to remember in this module, that the bank account, what we are maintaining with the bank, is basically of two types. One is fixed deposit or the time deposit, and the second one is demand deposit. Fixed deposit means that you have kept money in the bank for some time period. That can be a month or 6 months or a year or more or less. But in that time period, you cannot withdraw your deposited amount from the bank. You have to wait till the maturity of that term. And then you will withdraw your deposited amount along with the returns. And the second type of deposit account is in fact the demand deposit. When we say demand deposit, it means that we can withdraw cash from our account on demand. So whenever we will demand, the bank is obliged to pay our deposited money to us. So this deposit amount, this deposit account is in fact the account for which we prepare bank reconciliation statement. We do not prepare bank reconciliation statement for the time deposit or fixed deposit accounts. Rather, we prepare bank reconciliation statement for the demand deposit account. And these demand deposit accounts are of two types. One is current account and the second one is profit and loss sharing account, and also known as saving account. So bank reconciliation is prepared either for current account or for saving account or profit loss sharing account. Because transactions frequently take place in deposit account, not in the time deposit, in demand deposit account or current account or saving account, not in the fixed deposit account or not in the time deposit account. That's the reason. If there is no transaction, there is no need of bank reconciliation. And finally, further deposits and withdrawals are not made in time deposit account, as we have already discussed. So these are few tips that you should keep always remember in your mind that will help you to work out bank reconciliation statement. Thank you.